Assalamu alaikum. My name is Mahmoud Akbar Afridi, and today in this video I will be telling you about sales and sales returns day book sourced. Okay, every time a business sells something on credit, that sale has to be recorded somewhere before it even reaches it before even it has been recorded somewhere before it has been reaches the ledger. That somewhere is the sales day book. Okay, so there's a book where we record that what we have sells and for how much amount and like these kinds. And when a customer sends goods back, that's a separate book entirely. Okay, the sales returns day book. Today we are covering both, so let's go into it. What is the sales day book? The sales day book is a book of prime entry used to record all credit sales. That means sales where the customer hasn't paid immediately but will pay later. Like he's haven't paid on the time, he will pay in future or after some time. It's important to note cash sales do not go in the sales day book, only credit sales. Okay, so cash sales do not go there. The source document for each entry is the sales invoice, the document sent to the customer showing what was sold and how much they owe. What goes into the sales day book? Each row in the sales day book typically includes date of the invoice, customer name, invoice number, net amount before tax, sales tax, VAT amount if applicable, gross total what the customer actually owes at the end of a period, daily, weekly or monthly depending on the business model, that how the CEO or the owner have set the criterias and the circumstances according to which they will be functions, day-to-day functions and recordings. This total is what eventually gets posted to the general ledger, not individual transaction line by line. Okay, what is the sales returns day book? Now sometimes customers return goods, maybe they were faulty, wrong or simply not needed. When that happens, the business issues a credit note to the customer reducing what they owe. The sales return book. Okay, the sales return book records these credit notes. It works like almost identically to the sales day book. Okay, but instead of recording what's owed to the business, it records a reduction that was owed. Okay, why keep them separate? Okay, so obviously there is a reason to keep them separate, the reduction and the one that should be added. You might wonder why not just record returns as negative entries in the sales day book. The answer is control and clarity. Keeping returns in their own book makes it easy to total credit sales for the period, total returns for the period separately. This matters for spotting trends like a supplier or product line with unusually high returns, and for keeping the audit trail clean. Okay, how it flows into the ledger. Here's the key exam point. Individually entries in the day books are not posted one by one to the general ledger. Instead, each sale return is first recorded in the individual customer's account in the receivable ledgers, so you know exactly what each customer owes. The day book totals, the summarized column totals, are posted to the general ledger, debating on credit or crediting the sales account and sales returns account accordingly. This two type flow, individual entries to personal accounts, totals to the general ledger, is a common exam focus, so make sure it's solid. Quick recap. Okay, like just a quick revision type. Sales day book is for recording credit sales and sourced from the sales invoices. A sales return day book. Okay, with the product that are being returned by the supplier or the marketer or anybody, we could say, records credits notes for returned good. Cash sales never appear in either book because we have to give records. Cash usually don't have that record and we have to bring records. So business bank transactions records are usually included there, never cash transaction cash giving or receiving. Okay, Individual entries go to customer accounts, totals go to the general ledger. So this is all of for today. Thank you for listening.